Good morning, traders. Welcome to Admiral Markets webinar, live webinar here. Today's focus is going to be on price action and patterns. Let's get right started with looking at the charts. First, though, as always, be aware that this webinar is shown to a global audience. May not be suitable for everyone, though. Please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity for more details. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Alrighty, so as always, let's take a quick look at the calendar. You can find that by going to admiralmarkets.com. Then clicking on Forex calendar and then looking at the schedule of this and next week. You can do that also by going to fundamental analysis at the beginning of the week. There's an overview of the key, news events that are coming up. Tomorrow there is FOMC, for instance, if I remember correctly. Today we have some news events that you can see here, marked as green, yellow, and red. You can look at that yourself too. One of those was the interest rate decision, stayed the same. We have other news events as well, a GDP growth, for instance, unemployment rate in Germany, and in the Eurozone, generally speaking, as well, plus GDP growth in the Eurozone, etc. So you can take a look at that. Excuse me. Let's take a look at the charts right now. At this moment, unfortunately, the pound itself has been already moving to the downside, so that's something we cannot really do anything about. But I managed to take a breakout myself, so we can take a look at that together. But there's some other things I would like to show you. For instance, like a pound odd that I think could be an interesting setup, as well as it's breaking a bear flag at this moment. And I would like to discuss euro yen and pound yen as well. That's on the list. And we'll take a look at the euro dollar and dollar yen, obviously, as well. One of those two major currency pairs, of course. Last week, Thursday, there was a webinar, educational webinar, Nennet and myself, and we discussed indicators. Two that I mentioned were the fractals and the Fisher. So when looking at price action and patterns, I added for today's webinar the Fisher and the fractals, the custom-made fractals that I designed myself and a programmer made for me. So yes, today's focus is price action and patterns. To see patterns in a different way, though, I've added the indicators that I used Thursday. So basically, the pound USD, in my opinion, we're looking at the 30-minute chart. We see, first of all, a strong momentum to the downside. We see that the price is below the long-term moving average and was making a correction back to the long-term moving average. When we put a fib from the top to the bottom, you see the price had hit a 38.2 fib and was struggling at that 38.2 fib right there. So that's one of the, excuse me, one second. Sorry. Was struggling at the 38.2 fib. And you can see that there were about 2, 4, 6 candles here not breaking this top. So from my perspective, you're looking at time factor patterns. When 5 to 7 candles do not break a top, that means that this particular swing high, swing low, this correction could have been over. There was a chance, a decent chance because of that, that this swing high, swing low to the 38.2 fib was finished and completed. So there are a couple of things in play. The momentum to the downside, as you can see, the correction up towards the fib, and let's see, we see that the oscillators were topping out here. This already went up as well, the awesome oscillator, but so that was not ideally aligned. Preferably this would have stayed bearish, but okay, this did turn as well and was receding. All right, so that was one of the factors as well. The other factor was that we had bearish fractals, red bearish fractals, as you can see, and a break of that fractal and a break below these lows. You see kind of a range in here like this. So when price was breaking below that, I took the short right there and took the breakout, basically, the bearish breakout below that consolidation. And that was basically a bounce at the 38, but I took the breakout after the bounce. On other time frames in the hourly chart, we can see that basically price had already broken the original uptrend here. You can see it right there. We have lower lows and lower highs. Price was retesting the long-term moving average, so this could be a pull away from that moving average as well, like this. And when we put Fibonacci sequence levels on the chart, you can see that this is the base level, the pink one, 1, 2, 3. For those that follow my webinars regularly, I know that this is a lot of various concepts put together. So if there's any question at any point, feel free to use the chat to ask me. I know that this is maybe mixing a lot of things here. But anytime price breaks below the third, there's a good chance for it to accelerate to the fourth and the fifth level. Consider the fact that it was close back to the third, hooking back to the third in a way. I thought it was a pretty good chance it could fall down to the fourth level at least, and that minus 272 target after hitting the 38.2 fib. Also on the hourly chart, you see that the Osmo oscillator stayed bearish, but the Fisher had turned. So, well, that hadn't happened yet, but I thought it was a good chance it would happen. So that really didn't count as yet, but so we got a good hourly breakout candle at the moment. So that was my reason for entering at that point. Now, talking about trade management perspective, I had, or the stop loss, initial stop loss, I put the initial stop loss above the 50 fib here, as you can see, and went about a couple of pips above that. And I put the target at the minus 272 target. That's about a 2-to-1 reward to risk ratio. That's the initial trade idea. The trail stop loss, the trade management, is something I would do discretionary. And from my perspective, I want to give the trade some time to develop. But once it does go my way, or it takes too long to go my way, I do want to use a trail stop and reduce the risk, preferably to zero, or at least make it as small loss as possible. Now, considering that price has already broken to a lower low, and there's a substantial strong candle here, I don't have anything against moving the stop loss. In fact, in a few minutes, this candle would be closed as well. This is an hourly candle, so I don't mind, moving the stop loss above this candle's high and just moving it to break even like this. All right, so that might end up as a break even trade, but that's okay. It is maybe perhaps on the early side, to be honest, because it could make a retracement and then still continue downwards pretty easily. If I would have used maybe a tighter stop loss, because the currency has moved 26 pips, I might even have taken profit. But the stop loss was too wide for that. I'm looking at probably about a 35 pip risk. So from my perspective, before I close any part of the trade, it would have to be at 124.50, and I might consider closing half the trade, for instance, and letting the other half try to reach its full target. At this moment, I would use this 50-minute candle as basically the trail, the high of that candle. As price retraces to this, part of this candle, I want to see immediate follow through. If it goes back and retraces further, I don't have to be part of that trade. So it is a bit tight, but I don't think it's a problem to have a tight trail trade management style here, because the 38.2 fib is a pretty shallow fib as well. And it could be a complex correction, adding a bit of waves into that, and it could make a complex correction back to the 50, which could be, again, interesting for another short potential. So that was my reasoning for the pound USD. That's a bit too late now for you looking with me, but at least you see what I was thinking and what I did and have done. And the trade is break even, so nothing can go wrong at this moment. from a bigger perspective on a 4-hour chart, we definitely see a bearish channel at this moment, and price could go back to the long-term moving average, for instance. There's divergence between these tops. So I wouldn't be surprised to see continuation of this bearish momentum. But of course, if price were to break above this resistance line for whatever reason, then in that case, this correction to the downside might be finished in that case, right? And price might be able to start a new bullish breakout. For the moment, considering the fact that price has broken the level 3, I think the main target is 4. If it breaks below 4, it can even go further to 5. And test this bottom. If it breaks 5, there's even more space. All right, so I'm not sure how far this correction to the downside will last. We'll have to see step by step. But my validation levels, my confirmation levels, what zones I'm interested in, and that's how I'll be tackling this pound USD. From a very grand scale, this is the 4-hour scale. From a, let's say, even bigger scale, I'm not sure, honestly, at this moment, if this is up or down or what type of correction this is. Basically price is making ups, downs here, going sideways, making up, down within the up, down. So it is close to resistance here. So to test support might make a lot of sense, right? So it wouldn't be that strange. But how this correction fits in the larger picture, I'm actually neutral at this point on the pound USD. And I want more information. So yes, the weekly chart is still downtrend, but there is a huge complex correction going on, and I don't have any particular favorite at this point. Normally I do, this time not so much. So for me, only the lower time frames are interesting at this point. And I think there is a good chance to retest support. Part of that has to do with the dollar. The dollar is looking pretty indecisive this month. And we can take a look tomorrow at the dollar index. We can take a look at, of course, all the long-term time frames, the monthly candles, to take a look at how those candles close. That's something to be a bit cautious of today, is the fact that it is the last day of the month. And those could create, typically, the day could be a bit more volatile as hedge funds, for instance, are trying to close profit for this month. I mean, that is something to be aware of, that the market could be a bit less technical sometimes. All right? But anyhow, tomorrow we'll have that information. My personal idea, and then I'll move on to the pound odd, is that the dollar seems to be hesitant, and the market seems to be hesitant about the dollar because of the political situation, the political factors that are playing a role, I think, in the U.S., obviously, the U.S. dollar. Normally, I would say that the politics is not a very big role. But in this case, we have a president that has never been in government before. So this is a first. It's a new thing. It is a president that has only business experience. That is literally a unique thing, right? So the choices he has made as a president in the first 11 days or so, right, have led to battles between judges recently and the White House, and protests on the street. And the U.S. president has hinted at protectionist stances, which I don't think is that great for the dollar, protectionism, in the short term. In the long term, if the whole globalization starts to weaken, the global trade starts to weaken, then the dollar might again strengthen as global insecurity. The dollar has a role of being the backup, right? The reserve currency. So if there's a lot of insecurity, the dollar might pick up again. But until that moment, I think protectionism is not, I would think, not, from my perspective, not good for the dollar. I think and I don't like to analyze the why behind movements that much, because it really is not, I think that important. I like to look at technicals, but I think that that is the hesitation behind the dollar. But let's see. That could be just one factor. I do think, though, that if the interest rate hikes occur later this year, that should push the dollar again upwards. So the top of the hour, we see the top of the hour. Let's take a look at the hourly candle. And we see a bit of a hesitation candle, a bit of a wick at the bottom here, as you can see. So I think I'm fine with that stop loss above the hourly candle. Now, I wanted to show you the pound odd. Excuse me. Very quickly, price made a retracement to the 50 fib, has hit the minus 61.8 and bounced off of that. From my perspective, there are two possibilities, obviously, but okay. One is that this is a zigzag. I would only trade the zigzag if it manages to break above this top. And then there's this space up to the previous bottom here and here. All right, so that would be the bullish breakout up to resistance, and I would expect price to turn at these bottoms here back down, at the long-term moving average as well. Alternatively, if it's not a zigzag, it could just be a minus 61.8 bounce, and if it breaks, it could just head towards the next target, the minus 1,000 target. So that's why I think these two trend lines are critical for a breakout to the upside or a breakout to the downside. I think a breakout to the downside is most likely, but both are possible. Zigzag, those two trend lines are key. Now on a 4-hour chart, or daily chart perhaps even, you see that there was momentum here. We broke, the currency broke through these support levels, and we had a good fall down to test the bottom, didn't break the bottom, and now it's moving up again. All right. So from my perspective, it looks like this correction has been completed. You can see a price broke below this support trend line as well. Now, this upside has lasted quite strong, right? So there is not much divergence between those tops on the 4-hour chart somehow. But on the 1-hour chart, we do see divergence, funny enough. You see that? This was the strongest. This was the weakest. So it is a bit funny how, let me double check that. It's funny how that happens, but okay. Probably because the 4-hour chart was so deep here, low below the zero line, that it only peaked above the middle line just a tad because of that. In any case, 1 hour does show divergence, but okay. This is probably an ABC zigzag, but for that to be confirmed, price needs to break below that particular top and this particular bottom. So it's still in a gray zone. It could still be a correction for more upside. It hit the 50 fib and it's respecting that 50 fib. So if it breaks the 50, there's space to the 61.8, especially if it breaks the 61.8, then I would think there's more potential right there and right there. So if it does bounce at the 50, before I would trade it to the upside, I would need to see a break of this resistance trend line, like that. So that could be a restart of the uptrend if it breaks above it. The alternative is, of course, if it breaks below basically this bear flag. It already did that, but I didn't take the trade, as you can see, because I was still hesitant about the 50 fib, and there's a double bottom at the moment indeed. So what I was looking for basically here was, first of all, the Fisher to turn, which it did. There's still a downtrend on the oscillator, and the Fisher turned, which means that basically the correction could be over. All right, so that's one thing. I was looking for a candle close near the low. We got that. But I was also looking for a candle close that was below the Keltner. The Keltner is really, really very close, as you can see. I wanted to push through that in a way, just something like similar like here. You see that that candle is not broken. That candle got some retracement, but then continued. That didn't happen. So I wanted a bit more confirmation of a push through not only this bear flag, but also through the bottom. and the Keltner. That didn't happen. At the moment, price is retracing back up, so who knows? It was good I waited with the pound odd. So upside, I'm not interested in, once again, just to repeat, only after breaking the resistance. The downside, I am interested in if it breaks below this support level and the Keltner, and there could be a follow through. We can put a fib from here to here, or let me put a fib sequence from here. All right, and you see it's at a crucial third level. This is 0, this is the base. 1, 2, 3, 4. So yes, it could hook back to the second level, for instance, or first, and then still make a turnaround. That's one option I would be looking at as well. The other option could be to break below the third and the bottom, down to the fourth. If it breaks the fourth, down to the fifth. That would be a very interesting zone for downside. So that's what I'm keeping an eye on the pound odd. And if anyone is interested in this particular fractal indicator, in the Fisher indicator, or in the Fib sequence indicator, script to be precise, you can write me an email and I'll send it to you. Free of charge, of course. One second. At is a snail sign. It's just not working because I have my drawing tool open. So use this email. If you're watching later on the recording, feel free just to pause it right now. And if you're in the live webinar, I just sent it to you through the chat. I'm a huge fan of this Fib sequence and the fractals because it shows where the wide open spaces are, or at least some of those open spaces. So I really appreciate that. So if you think it's interesting, just write me. All right, pound usually took out my trade already. So that was a break-even trade. I think it made sense. I don't think I would, as I said, I would not want to live through something like this. And it seems like that is happening. Well, I don't know for sure. It could just still be a retracement, but I'm still primarily interested in shorting it though, just at a different moment. Perhaps at the 50 fib up in here, right? As it makes a correction like this, at the resistance trend line, at the Keltner, at the 50 fib, if we put a fib from here to here, 50, Keltner, trend line, could still be a good spot for that to push down, and the third fib sequence level for a move down to the fourth. If it does break above the 50 and 61.8 fib, I'm not bearish anymore. This is really the last retracement I want to see. If it breaks above that, I'm not looking for shorts anymore. At that point, I would look for price to move higher, to see how much impulse it has to the upside, and see if price makes a bull flag. If it does make a bull flag, I would turn the tables around. I would put the Fib sequence levels here. Again, let me do that right now, in fact, so you can visually see that right away. All right, you see that price has hit the first level. So what it would need to do is break above the second, basically. It would probably stop roughly at the third, right? We'll see some good momentum. We might see a bull flag, and if it does that, it will break and go up to the fourth. And this is the zone where it's most interesting right there, probably. All right. For the moment, though, let me put back the bearish sequence levels. All right, euro dollar. Now, in my wave analysis, I was either contemplating that this is an ABC or that this is slightly more complicated 1, 2, 1, 2. So far, we don't know because the invalidation level is this top of that 1, 2, 1, 2 idea. So anything above that, below that, could still be 1, 2, 1, 2. So we can put a fib from here to here. Price stopped at the 78.6 fib, but we also have to realize that there was a lot of momentum here. That's one of the reasons why I didn't short the euro dollar this morning, even though it looked like it was turning slightly here. I thought that it was not worth it, and it's good I did it because you had only a slight push down before it went up again. The 88.6 fib is the last potential turnaround that might end the zigzag, but I say might with a big emphasis. We'll have to see. It's still a resistance level. 107.25, Keltner, 88.6 fib. It is something to keep an eye on. And let's see if there is a turnaround. If there is a turnaround, I might consider it. I might consider it. I'm not a big fan of the euro dollar in general, though. It was at a turning spot here, but the turn has gone choppily so far. This is all mixed up, and moving averages are not aligned. This is a range, quite choppy. So I'm not that excited about looking for a trade on the euro dollar, even though it is at a decent resistance level. I probably would rather focus on other pairs at this moment. All right. So let's see. What else? Dollar yen. Now, the dollar yen retraced further than I expected. I was thinking that this could be the first bounce up again, but it broke actually through my invalidation level, this trend line, but primarily also this top. And this upside I started to be worried about this upside when this oscillator, this fissure turned, and the awesome was still down right here on this candle. That for me signaled the end of the potential rally. And of course, the break of this bottom was the absolute tipping point. And we got indeed a correction lower. Now at this moment, the correction might still push lower again. One more push. You can see that price is at the crucial third level, but did not break below it. So just like the pound odd, I would need a push below the third before move to the fourth and the fifth is possible. It could respect the second and the 55th. So I'm keeping an eye on the dollar yen at the 50, 61.8 to see if there's any turn for a move down to the fourth. If it doesn't respect those levels and instead breaks again above this trend line, just like the pound odd, then I'm not expecting the correction to continue, but in fact, there could be a bullish breakout. So that's the key decision zone, for my opinion, on the dollar yen. The same is valid, in fact, for the euro yen. I was not interested in shorting it here because it was too close to the Keltner and too close to support, and it needed some space before it was worth shorting. I do think it's still interesting to short because there's a lot of momentum on the yen to the downside here. And there could be a follow-through of that. So I'm definitely interested in keeping an eye on these three fibs as well, but I was just not interested in shorting it here because the likelihood of a bounce, in my opinion, was too high. Now you might wonder, if you think that the likelihood of a bounce was high, why didn't I take the long, right? And some people might have taken a long, but I am not a massive reversal trader. Sometimes I do. Nanit, in fact, has created and tested a reversal strategy, and he has made in his first, I think it was 7 days or so of trading, he made about 60% on that. So that's great. It's based on price action patterns. So I'm started using that. I will start using that today as well. Do my own testing with that. See if it's something I want to add to my system as a of diversify with another system. I think it's interesting because I don't have any reversal system in my sleeve at this moment, let's say. So I think that could be very interesting. But generally speaking, I rather look for with the trend setups. So from my perspective, yes, there's it could bounce, but it could still meager on as well, lower. So that's why I rather skip this one from my perspective. Pound yen has already reached the fourth level. And it could hook back to the third, the 38.50 fib here around 143, 142.75, and make that fall to the fifth. I'm keeping an eye on pound yen short. I think that could be very interesting as well. So I'm keeping an eye on the dollar yen, euro yen, pound yen. Pound yen might seem even the better one from my view. You can take a look at the euro pound. You see that the euro pound has had 2 bullish days. One of the reasons why the pound yen might be a bit better. So yeah, the dollar, I do think it looks pretty choppy, and it looks a bit unsure to me. Yeah, quite corrective. Your dollar specifically. So I have to see. I think from that point of view, pound yen could look interesting, and pound odd could look interesting. Pound odd, of course, has not broken the third level yet, but there is, I think, something to keep an eye on for up or downside in a way. But the pound yen more downside. Pound yen would need to really, I think, yeah, would have to really show a lot of momentum here before I would switch that, or it would have to just show momentum, I should say. So uh, that's the yen pairs. That's the dollar pairs we talked about. We talked about some of the euro and pound crosses. Does anyone have any questions? We got a question here. Where do you see the best spot to short pound yen? I am most interested in looking for a bounce at 143, 142.70, 142.65 here to 38.50 fib, max 61.8, 143.25. Anywhere around the traditional 38.50, 61.8 fibs. Now, yeah, that part of that is just look at that strong candle here. That is a strong bearish candle, close near low, engulfing 3 bullish candles before that. We could see a typical ABC correction as well, right? Other than that, we see that the Fisher has turned as well because of that yesterday. We also can see that this was strong momentum. It's back to resistance, and the correction could expand further down like that. But it doesn't have to go that deep. I mean, it could just, of course, also move and test this bottom and then bounce again and build a triangle. So that's something you want to be aware of. From a weekly perspective, you know, this what this is and this is, we don't know yet. Obviously, we see that there was a strong uptrend. There was a strong bearish reaction. What could happen is that there is some ABC correction like this, right? That wouldn't be so surprising. But is this all of the correction? Let's put a fib from here to here. Kind of hit the 50 fib. So it could go deeper to the 61.8, for instance. Or the 50 fib is the bounce. In that case, the correction might only go here and we'll see a follow through like that. So things to keep an eye on. This trend line, a break above that, of course, means that there's a good chance of this happening. We'll keep an eye on this support level right in here, basically based off of this candle. But until that moment, there is a good chance of retesting this bottom at the very minimum, if not potentially breaking through. So what could happen is this and bounce, or this bear flag and continue. So from my perspective, it looks bearish for our chart. A lot of momentum here. So I move down to this, what is this, 5th level or the 6th is are serious options. Price broke through this support trend line. And of course, if it breaks above this resistance line, then things might be, and the 61.8, then things might be different than I expect. Any other currency pair you want to take a look at? Could take a look at the New Zealand maybe. Let me know if you have a particular one in mind. The Aussie's really, really struggling to move to the upside. Really, really difficult. You got some, let's say, parts where there's really a lot of momentum all of a sudden, but then it just goes into a long, protracted, massive correction. Yeah, I'm starting to lose a bit of interest. I mean, I'm bullish, as you probably remember. But this is not giving me any hopes for that. It's again at support. I guess it could, in theory, bounce again, like it did in the previous 3 times. Well, yeah, I would probably need to see more information here. I would probably want to see the break above this resistance. And then there's still, I think, some space left for potential trades to the upside after that break. Kiwi dollar, we can definitely do that. We'll do that right now. And Bob is asking regarding the live analysis that Nennet and I are will be doing for ourselves as an extra, and traders can look along with us. It's not a webinar. We'll be actually updating that in on the website, and we will be basically updating that with charts. We might add some webinars occasionally, but it's not going to be a fixed thing. So we will add some educational things. We'll add some live analysis things, but it's going to be all of it will be updated in the members area. But most focus will be just on charts. We want to communicate any updates. We will send a tweet through the Elite Currency Twitter account. And the reason why we do that is because emails would just unfortunately be too much of a time eater to set that up every time. Let's see, Kiwi is difficult. I would say that for the moment it is still significant bearish momentum, and this could easily be a bullish correction. On the monthly at least. The weekly, however, we see that this has moved quite choppily like an ABC zigzag. Furthermore, this upside has broken above some resistance levels already. And you can see that this correction seems to have been finished at the minus 272 target. Now the 4-hour chart is in the channel to the upside. Seems to be running out of some steam when looking at divergence at least. And considering that, I think there's a chance for retracement. You can put a fib from here to here. And let's see. A break of that channel, we might see price retest these fibs and potentially bounce at one of those as well. This is looks quite indecisive to me. If it manages to break through the Kellner and the stop, I mean, there's no reason why it couldn't continue with the uptrend as well. We can put fibs to the upside. There could be some space up in here, and then above the channel perhaps. At this moment, I don't think it's interesting unless it really shows a strong candle breaking through the Kellner with the close near that high and above this top. In fact, some might be looking for reversals on this. One of those reversal ideas could be a break below the support level like this. Perhaps if you were very adventurous, maybe even weakness up in here. Risky, but not working that bad at the moment. That's about it, I think. Ultimately, I think there is a good chance that price will make a retracement back to the long-term moving average and the broken trend line and the 38.2 fib. Let's see. A question: Would you agree careful to trade? I'm not sure what. Can you rephrase the question there, Stuart? I'm not sure if I follow. Two new leaders. Let's see. Would you agree careful to trade? Would you agree to trade carefully, you mean? Because there are new political leaders in both countries. I'm not sure which countries you're referring to, both countries. US, of course, one of them. Oh, Britain. Maybe you're talking about Britain, Stuart. May and New Zealand and USD. That was a continuation question. Okay, got it. And the TPP, yes, TPP has been canceled by the US president, and he wants to do one-to-one deals. So from this perspective, definitely, I think the dollar could be treated with caution, and the New Zealand USD as well. I agree. Stuart says that the ex-finance minister has become the new prime minister in New Zealand. So I have to see. I would say, technically speaking, a break and close of a strong candle above the Keltner and above this top would be a continuation of this uptrend channel. Odd USD, I think this bottom is very important. If it breaks that bottom, we can see some space to challenge various support levels like this. This bottom is important because that could be a inverted head and shoulders potential right there. So that could be downside. If it does manage to break above this top and the Kellner, same thing, there could be a bullish break too. Let me put the Fibonacci sequence levels on. Yeah, break there, could see a continuation up to that fifth level. At this moment, the hourly looks very, very choppy. So I would not be very interested in trading it in this particular zone. Your dollar keeps pushing up. It has hit the 88.6 fib. Let's see what kind of hourly candle reacts to that. And take it from there. Of course, if it breaks through this, then, well, it is more bullish than I anticipated when price was turning here. I thought that there would be a bigger turnaround. But if it breaks through this, then that reversal retracement was quite shallow. All right, so let's see about that. This is all I had to share for the moment, though. So looking forward to seeing you in the upcoming webinars, of course, which you can find not here. This is where you can find articles, of course. Please feel free to do that too. Analytics, articles, wave analysis, technical analysis, fundamental analysis. If you're looking for webinars, though, just hit on or click on education, click on Forex and CFD webinars. Then you'll see that tomorrow we have strategy webinar. Then it takes a look at master candle trading. Definitely would recommend that. Very interesting. And Thursday, we're taking a look at exotic candlestick patterns. So as you can see, we're focusing a lot on candles Wednesday, Thursday, and on Fibonacci and waves tomorrow as well. So, well, hope to see you there, and wish you great trading, folks. Cheers.